Set it and forget it. If you've ever struggled with insomnia and are of a certain age, you probably remember that 1990s infomercial selling rotisserie oven and the ad guy and the live studio audience where they chanted the catchphrase, set it and forget it. As corny as it was, that phrase helped move more than $2 billion worth of product. There are some things in our life that you simply can set and forget. And that's exactly how I treat my physical gold and silver. I hate to admit this, but Warren Buffett was partially right when he said, gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars will be scratching their head. I promise you this, the next time I have a conversation with the Oracle of Omaha, I'm going to ask him if that statement was a little bit of tongue-in-cheek. Regardless of its lack of utility in the eyes of some, the value and role gold and silver plays as a portfolio diversifier, hedge against inflation, protector of purchasing power, and general insurance, well, it just can't be denied. For better or worse, there are a number of asset classes we can invest in, and even though the returns from those assets can vary dramatically, gold and silver do something none, and I mean none, zip, zero, zilch, of the other assets can actually do for you. More on that in a moment. For the last few years, we've heard an awful lot about central bank buying, and frankly, too much has been made of this. Yes, central bank buying has helped stabilize the price of gold, but it's also not like they're placing their monthly order with Pimbex or some other online dealer. No, they are transacting in a very different space and place. As I shared before, what we, the retail investors, are waiting for is for the herd or Joe Public to realize that gold and silver are not just some pet rock. When that happens, prices will quickly do an about face. Unfortunately for us, when shifts in the market start to occur, there isn't someone that rings a bell or the firing of a starting pistol signaling that things are changing. In a recent Gallup poll, for the first time in 10 years, respondents preferred gold over stocks when asked to name the best long-term investment. And that percentage had jumped from 15% in 2022 to 26% this year, while those preferring stocks dropped to 18%, which was 24% last year, and those favoring bonds climbed to 7%, which was 4% the previous year. Another example, the U.S. Mint sold 5.56 million troy ounces of gold since March of 2020, compared to 3.26 million the 4-year period before that. This concern that stocks lack a level of protection provided by metals is now motivating investors despite the price volatility of metals. Now, here's something that's interesting. In a different study of 1,000 investors with over $250,000 invested, they found that 20% of those individuals owned some type of gold, and on average, that was about 14% of their holding. Making things even more interesting, they found that slightly more than 50% of those that own gold owned it in physical metal or mining stocks. Look at what real people are doing who are making real money and how they're holding their assets, and holding on average 14% in metals, and more than half of that being in physical metals and mining stocks. That is how you protect your money. That is how you make your money grow. Now, let's finally talk about that one thing gold and silver can do that no other investment can do. You ready for it? They help you sleep better at night. It's the insurance that you hate to use, but you're thankful that you have. As one investor stated, precious metals are kind of what just makes it so I can sleep at night. It's impossible if owning gold that I'm going to end up in a bread line somewhere waiting for someone to drop something in my hand so I can eat. This safety net is important as we continue to see weakness in the economy. Take a look at the change in bank deposits on a quarter-over-quarter basis. We just can't pretend that there aren't certain timeless principles that are a part of the wealth building process. While many aspire for wealth and only a few make it, and they do so by diversifying their income, their investments, using leverage investments appropriately, and investing in their financial education. Another investor made a great statement. Quote, when you're buying metals and holding it, it doesn't matter whether the price goes up or down, you still feel pretty good about it. A downtick in the price of precious metals means that you have an opportunity to buy more, and an uptick means your net worth goes up. So it's a win-win. In a recent SPDR survey from June of this year, more than half of the participants said they are likely to increase their gold allocation in the next 6 to 3 months. In another study by the State Street Global Advisors, investors who already have an allocation to gold in their portfolios are planning to increase their allocation to the metals through 2023. In a different study, nearly 7 out of 10 investors in the survey said that they hold gold as a hedge against inflation and economic downturns, and approximately 57% of those using gold ETFs said they plan to put more money in that asset class over the next 6 to 12 months. That compares with 40% who plan to keep their investments as is, We all know the benefits of owning gold and silver, and it appears that those who get that gold isn't a pet rock are planning to add more to their holdings over the next 12 months. This bodes well for us because as money rotates from other areas and into metals, that shift, which is currently quietly happening, will be that additional tailwind that we need for gold to break through $2,100. Regardless of what the prices do in the short term, what I do know for certain is my physical holdings help me sleep better at night because it is better to have and not need than to need and not have. As strange as it may sound, you sleep a lot better knowing that you can lay your head on some gold and silver. So be patient with this market, use falling prices as a sales opportunity, and know that you're ahead of the curve. In the comments section, does having physical gold and silver help you sleep better at night? Are metals your calamity insurance? Do you plan to add significantly to your stack over the next 12 months? Or you can simply put an A+ in the comment section so that everyone can know that you always stack smarter and never stop learning. Speaking of learning, now to the sponsor portion of this video, and I want to thank West Red Lake Gold Mine, stock ticker symbol WRLGF, for sponsoring this portion of the video and providing me with an opportunity to dig a little deeper into their company. You all know I love my mining stocks and the leverage opportunity for growth they provide. I know, this hasn't been a very fun ride for those of you who have been buying shares of miners as they continue to be overlooked and neglected. It's been a rough roller coaster ride, but I actually love it because very rarely are we presented with such an asymmetrical wealth building investment opportunity like we have right now. Not only with the physical metals, but also with mining companies. The thesis is very simple. If you believe we are in the early stages of a commodity bull market and we expect gold and silver to reach new nominal highs, then it is almost impossible that the mining companies that pull these metals out of the ground won't benefit significantly. If you agree with that thesis, then the only challenge is finding the right companies to own. Without a doubt, one of the best ways to de-risk your mining investment is by purchasing existing producers, as we already know what they have in the ground and they're bringing that to the market. At the same time, developers and explorers have the potential for even greater growth because of where they are in the mining cycle, but that usually means a little more risk. In the previous video, I showed you how that leverage growth could look in comparison to the price appreciation of physical metals in your hand. Trading at 48 cents per share as of Friday, West Red Lake Gold Mine sits in what I believe is an incredible sweet spot that has tremendous upside. While priced like an explorer, they are far more than that and present a very unique opportunity. So much so that after I completed my research into the company, I immediately bought several hundred shares. Now, of course, that's not advice or a recommendation. I'm not authorized to do that, but I can share what motivated me. With a market cap of $66 million, I like the size of the company, but I also love that they have $13 million in cash, which means as an investor, my shares are less likely to be diluted because they have plenty of cash on hand to meet their needs. This means West Red Lake has an enterprise value of $53 million, no debt, and they are trading for less than 50 cents a share. And that's good and all, but here's where West Red Lake takes things to a whole different level. They recently acquired the past producing Madsen gold mine along with a 800-ton per day mill. Just pause for a second. They already have a state-of-the-art mill that has been built and is fully operational. In fact, it was fully operational just about 18 months ago. It has been estimated that in order to build from the ground up the entire development of the mine and the mill, where they presently are right now, it would take 4 years and over $600 million.
The Red Lake Gold Camp is a storied place for good reason. They have been mining very high-grade gold here for hundreds of years. When I first visited this project, it was back in 2014. The predecessor company came in and saw the opportunity that there's still a bunch of high-grade gold in the ground. They dove into that opportunity. They defined the gold in the ground. They built the mill that you can see around me, and they literally stumbled at the 99-yard line, and that's where West Red Lake Gold Mines is picking up the project.
Even through their mismanagement, the previous owner had gotten the project to a market cap of $1 billion during the previous cycle. Now, take a look at this slide and some of the people who came in to pick up the ball. Well-known mogul Frank Guista, you know, the self-made mining tycoon billionaire who was instrumental in co-founding Goldcorp, which became the largest gold miner in the world by 2011. Then there's Sprott Resource Lending Group and Shane Williams as the CEO, who previously worked for El Dorado Gold, where he had taken a number of projects from exploration to production in less than 80 months. So they are well capitalized, no debt, proven leadership, and a state-of-the-art mill. But let's talk about their land and the deposit, because without a deposit, you don't have squat. Gold was discovered on the shores of Red Lake in 1925, and since 1925, there have been 28 operating mines, and 28 million ounces of gold produced at Red Lake. Red Lake is a high-grade zone and the backbone of this operation, with an average grade of more than 2 ounces per ton. With the Matson mine as its flagship asset, with significant infrastructure in place, and their Rowan project, which is a 3,100 hectare property with a 12-kilometer strike length that hosts 3 historic mines, Red Lake has the ability to mine future material that could be processed at the Matson mill right there on site, meaning they would have the ability to do everything from crushing to smelting all in one place. Finally, their plan is very simple. With a fully permitted gold mine sitting on high-grade deposits, they plan to stabilize the maintenance costs of the mine and the mill and make it more efficient. Finish drilling out the work that needs to be done to fully understand the geology, develop the mine to production, and then use leveraged cash flow to build a larger, bigger mining operation. Once this is done, they look to produce about 100,000 ounces per year initially. I love this project for a variety of reasons, especially because how quickly they will be able to turn this project into production. This isn't the explorer situation where you may have to wait 10 years to see what happens. We will know very soon in the future, and hopefully right on time for the best part of the bull market. Again, this isn't an advice. I can only share what compelled me to act after completing my research. Do your own due diligence because you have to own your own results. Thank you again to West Red Lake Gold Mines, stock ticker symbol WRLGF, for sponsoring this video and giving me an opportunity to learn more about your company.